this is John Kvale, and this is your Q2 video podcast newsletter review. And it is actually Easter Sunday. I'm sitting outside to avoid the snoring dog, but you're going to hear a dove that's making a coo maybe in the background. So a little bit of humor here and I'm about to go to a dinner, so I've shaved, and you get to at least see a mugshot here. But let's get with this, so we won't keep it too long. I'm going to move myself up into the corner. And for those newbies, we do this as a video, newsletter, podcast type of format. I like to give some granularity to the articles that we handwrite in office, mistakes, typos, and all. But I always say this, so those of you that are in listen-only mode, keep your hands on the wheel, especially if you're driving so you don't run off the road. All right, I got that out of there. Okay, for those of you that are in listen-only mode, here is a link on the blog to our newsletter page. I will have this uploaded on our newsletter page on our website shortly. And here is the good old-fashioned PDF download that you want, that if you would like to get it. That is, for those of you that are in listen-only, it's just a PDF link on our blog site. I've been doing these in a YouTube format and a regular recording format as well, because I've had some email issues. That's what's going on if you see double videos, and trying to work out the email issues where when you get an email on your phone, you actually see the video. So that's what's happening here. Our main article, those of you that are in listen-only mode, I am down to the first blip of the newsletter review, and that is Social Security earnings record check reminder. Okay, here's the deal. Whether you believe in Social Security is going to be around, if you're 20 and have heard it's not going to be around, I get it. As long as you haven't started drawing Social Security, it's worth you checking to make sure your earnings are getting credited. If Social Security is not around, okay, but you certainly want to get credit for the money that you're sending to Social Security, and that's all we're trying to get across here. So in the newsletter, I go into basically, those of you that are just listen-only mode, I've got a sample from the Social Security Association. Here's a sample earnings record and what it should look like. But in the newsletter, I go into exact details on where to go, how to set up your online site for Social Security. Don't lose your credentials. I had trouble with my credentials. It was terribly difficult to get back in because of what's going on with all of the stimulus thing that is also associated with Social Security. Most importantly, once you get your earnings record, look in there and make sure there are no gaps. If there are some gaps in there and you did not get credit, I go in the newsletter. I give you links to go in order to get credit. You want to get credit. Don't say, oh, it doesn't matter, Social Security is not going to be there. What if you're wrong? Then you didn't get credit for that. So, and that credit basically is to give you credit for the money that was withheld from your paycheck. And since Social Security Administration, that would also help your monthly benefit. Should you get your benefit? Okay, I know some people are going to argue with me, but that's okay. That's what we're here for. All right, Secure Act was passed in the final hour of 2019, which seems like forever. And then we had COVID hit, and what happened was a lot of the rules were blurred because of COVID. Most importantly, the required minimum distribution was not mandatory in 2020. We had a lot of people that still took them because of asset locations. The one thing I wanted to most important thing with regards to this, and those of you that are in listen-only mode, I'm going over a matrix that an industry professional built for us that I have permission to show. You don't have to take your RMDs until you're age 72 now. You can wait until you're age 73, but if you do that, you're going to have to take 2 of them. We rarely do that. And we also are not always, depending on the asset location, do you not just wait until you're 72 to take your required minimum distribution. If you have a extra large, as an example, if you have an extra large IRA compared to your other assets, it may make sense for you to take distributions from your IRA once you're retired, and depending on what your income level is, before you have to knock that thing down. So, okay, Buffett valuation indicator. I sent this out on the post on Street Sense and got rave reviews. Buffett is pretty quiet about, tight-lipped is what I say. in this post. Those of you that are in listen only mode, basically I've got a chart that is cool from advisors' perspectives, who the CEO personally emailed me and said, John, you sure can reuse this, just credit us, which I am happily going to do because they have a lot of really, really good stuff. Jill Minsky of Advisor Perspectives did this fantastic chart. Here's the deal, never been high. It's never shown as much overvaluation as it is right now. I had a really good buddy of mine fire back at me on this saying, well, there aren't as many publicly traded companies. Okay, there aren't. There's a lot less publicly traded companies, and this ratio is basically corporate equities to gross domestic product, GDP. It's still showing almost 200% for those of you that are in listen-only mode. Good news is we're expecting just rip-roaring macroeconomic earnings numbers coming that will hopefully pull this thing back in check. Bad news, now's not time to swing for the fence recklessly. There is a little bit of recklessness going on out there that we've seen. We've not talked about it just because it's not really worthy of your time. We're watching it. It concerns us, but those of you that are in listen-only mode, I'm going back to the beginning of this. We're almost over. But concerning the valuations, we are not inexpensive. That doesn't mean we can't grow into our valuations. That's what we hope. That doesn't mean that we will grow into them. We could continue rising, capital markets continue rising, staying well ahead of fundamentals, and that would be a problem. But we'll worry about that later. We hope you enjoyed this newsletter. I always thank you for your time. And if you know somebody that is that might benefit from this, send them. We do this as a public service to help everybody, but most importantly, we do it with you guys as clients in mind when we do this. So have a great day. We'll talk to you again mid-year on the which would then be Q3 newsletter. But remember, we do monthly podcasts, and I write 3 times a week. Thank you so much. Have a great day.